Good morning, good afternoon, good evening, no matter where you're joining us from. Thank you so much. Today, I have with me Rosianne. She's going to be giving us an update on the BeNeLux region. So thank you, Rosianne, so much. And for those who don't know Rosianne, if you could do a quick intro, that'd be great.
Morning, everyone. So I'm Rosianne. I'm working as an account manager at STR for the BeNeLux market and the French market. So I'm going to give you today an update on several main regions in Netherlands, but also in Belgium, and also some data on Luxembourg.
Thank you so much. So we are going to give it a minute just to let everyone join in. Thank you so much for signing up today. So Rosianne is going to be doing the bulk of the presentation today, and I'll be helping out with any Q&A and questions throughout the presentation. Please pop them in. If not, we can do some live Q&A at the end. So Rosianne's going to be giving us an update on Europe as a whole, and then going slowly more into the regions. Hello, Dan. Thank you so much for joining us as always. All right, I've also got the YouTube live stream going, so I think we're probably in a good place, Rosianne. If you want to just check if your slides are working, we can make sure that that is working fine.
So, share. Do you see the screen?
It's full screen now. All right, I think we're in a good place, so please go ahead and get started. Thank you.
Well, hi, everybody. So I was just saying that I'm going to start the presentation with a global overview over some data worldwide. Then we're going to focus on Europe, then on the Benelux, and we're going to end the presentation with profitability data and also our latest global forecast that we just released on the European scope by the end of November. And then, of course, we've got some time for some questions if you have any. So to start with, we've got some global data. So this is the occupancy for our standard methodology, which, just as a reminder, only includes our open hotels and our what we call TRI methodology, where we're going to see in this presentation most of our data are based on, which basically include all our hotels reporting data to STR. So this is the average occupancy at a continental level for the year of 2021 until the end of September. We can see here that the trend is basically that Europe is a little bit behind of other main market as North America and mainland China, because they're only achieved 30% of occupancy for 2021, comparing to a higher number in North America and China, reaching more than 50% of occupancy for the year. Then we've got some data on occupancy but indexed to 2019 levels. So here again, we've got the same trend that Europe is still a little bit behind, although they hit the half mark, reaching 54% of their occupancy comparing to their levels of 2019. While in North America and mainland China, the picture is a bit brighter because they reach more than 80% of the 2019 levels. Then on the ADR side, the picture again here is not the same, and the trend is not the same as the occupancy, because the ADR has been quite maintained, and most of the market worldwide has actually maintained 90 to 100% of the 2019 levels, which is actually quite good because, of course, it hasn't been lowered down and the market hasn't been, that hit that much comparing 2019 levels in terms of ADR. And then, of course, we've got the KPI, the RevPAR, which is directly impacted by the low occupancy. That's why the European number is only reaching 49% in standard methodology and 41% in TRI, because although the ADR was, maintained, the occupancy drives this RevPAR a little bit lower. And here we've got the same trend with North America and mainland China leading the way worldwide with more than 75, percent of the 2019 levels in terms of RevPAR. While in Europe, we've got only 41 and 49% of the 2019 levels. Then a little word on the supply and the new openings and project coming all over Europe in the next year. So basically here we can see a graph showing the new openings and also the pipelines from 2011 to the forecast we've got until 2023. So we can see here that despite the situation, we still had a lot of new opening, a lot of new projects going on. The number of 2029 can maybe seem really high for you, but this is mainly due to some delays that have been experienced. For example, project that meant to be happening in 2020 or 2021, of course, they were just delayed and applied to the next year. So this is why in our forecast for 2022 and 2023, we still have like a high number of new rooms opening. This is just the impact on the delays. In terms of phase, in terms of project, we've got a lot of hotels already, as we said, in construction. So then we got a smaller number still in the planning phase, and also the other one in final planning phases. So this is just to give you an idea about whereabout we are in terms of phases in the different projects in Europe. And in terms of what kind of projects are ongoing at the moment, so these are numbers updated at the end of October 2021. So we can see, depending on the classes, of course, the luxury class, we don't have so many rooms opening. This is just due to the kind of investment. But then for the rest of the classes, we got a pretty much a similar number. And a good mix of different hotels, new hotels opening in the different classes. And just to be a little bit more precise about the independent, basically we've put all the new projects that we're not at the moment aware under which brand they're gonna be opening. So that's why we just put this into independent, because we're not sure about which kind of hotel is it going to be, which class is going to be in, and especially under which brand is it going to be operating. And in terms of European countries, with with the most development project, we can basically see that the UK and Germany are definitely leading the way comparing to other European countries. We can explain that basically because some international hotel chains are trying to really increase the development in these two countries, because for now there may be a lack, for example, in Germany, of some big brands, bigger international hotel groups that are still trying to open new hotels in these two countries. Like you see that Netherlands, for example, is a little bit behind in terms of new projects comparing to other European countries. So now we're gonna go to the European side of the business. We're gonna first focus on the occupancy, and then in the second phase, we're gonna focus on the ADR side for Europe. So here you can see the average of occupancy index to 2019 levels for the main countries in Europe. So of course, I've highlighted a little bit thicker Belgium and Netherlands. So you can see where these two countries are actually, or how they're doing comparing to other European countries. So we can see a similar trends for most of the countries. But of course, we can just see that the United Kingdom has been a little bit leading the ways since the beginning of the pandemic. We can explain that by basically they've been not relying so much on international travelers, but they've been able to attract local clientele. So that's why they're a little bit ahead of everybody, of all the other countries in Europe. Then we've got the whole map with the main capitals and the main markets in Europe. So this is the occupancy for this year until September, so end of September. Here again, we can see that Amsterdam and Brussels are still quite behind some other market, reaching 21% for Amsterdam and 18% of occupancy for Brussels. And some other market reach a little, higher number, like Moscow with 65 percent, or London 31. But I mean, for 2019 in general, the numbers are still like pretty low for all European market. But then what's interesting to see is that for only the month of September, we can see much brighter numbers. So here, these are this is just the occupancy for only September 2021. So here we can see that Amsterdam reached 43% and Brussels 35%. Of course, it's still behind some other European market, but it is still, quite a great increase comparing to the global year-to-date occupancy. We can see that some markets like London, Edinburgh, or Moscow or Kiev did a really great performance in terms of occupancy, with for example, London 58%, Edinburgh 69%, or Moscow also 69%. Which just show you that there is still a little bit of the pace really varies from a country to another in terms of occupancy. And then we've got the third map, which is the occupancy index to 2019 for September 2021. So this basically gives you the picture that depending of the market, here we can see that most of them are indexing between 50 and 80% of the 2019 levels. Again, the same trend, Amsterdam, Brussels are a little bit behind. Some other markets like Paris, London, again, Edinburgh, or the same one, Moscow, Kiev, reach a little bit higher numbers. Then we've got two different graphs. So the first one is the weekday occupancy index to 2019 levels for basically the 3 months, so the months of September, October, and until mid-November. And then we're going to show you the weekend occupancy. So we've chosen some, comparable market with Amsterdam, Brussels, London, Paris, and Berlin. So you can see here that depending on the market, they reach between 60 and 80% of the weekday occupancy comparing to 2019 levels. Again, here you can see that Amsterdam and Brussels have been struggling quite a lot comparing to Paris, Berlin, or London. But we can still see some brighter number at the end of the month of October and the beginning of November, with recovery surpassing 60% for Amsterdam, for example, and even reaching 80% of the 2019 level for, I guess, the week of the 7th of November for Brussels, which is just showing you some recovery sign that is coming, a little bit slow, at a slower pace, but still. And then we've got the same for the weekend occupancy. So here we've got some higher number. So the weekends have not been impacted so much than the weekdays. So here we've got a recovery between 80 and 90% of the 2019 levels in terms of occupancy. Here again, you can see some good numbers, for example, for Brussels, because they reach more than 100% of the 2019 levels for the last week in this graph, which is the week of the 14th of November. And also Amsterdam reaching 80% for the week of the 14th of November. So then we're going to now focus on the European rates. Same comparison, same graph, but only focusing on rates. So basically here in the first graph, you can see once again the same markets as we just showed you, with Belgium and the Netherlands highlighted a little bit thicker, so you can just have a better look of how they're doing comparing to other markets. So this again are indexed ADR comparing to 2019 levels for the whole year of 2020 and until the end of October 2021. So here we've got, especially at the end of this year, since I would say mid-August, we've got almost a full recovery in terms of ADR, because most of the markets in Europe have reached 100% level of their 2019 levels. But of course, once again, we can see that the Netherlands especially has been quite struggling, and this is mainly driven by Amsterdam in terms of, well, we're going to see some much more focused data on this later on. But the Netherlands is a little bit behind in terms of ADR comparing to their 2019 levels, and also comparing to other markets like Belgium, will perform a little bit better. especially at the beginning of this September. So then we've done the same exercise, but with the ADR, comparing to 2019 levels for Amsterdam, Brussels, London. We've added Luxembourg, Paris, and Berlin. So here we can see that, again, some markets like Paris reach more than 100% of the ADR level in 2019, while Amsterdam, Brussels, or Luxembourg are still around 80%, except for some weeks that you can see like some spike reaching more than 100% levels for the weekday. And then for the weekend, we can see a more positive, I would say, picture, because here you can see that most of the markets, except Amsterdam and maybe Berlin, but they're not really far away, reach more than 100% of the weekend occupancy compared to 2019 levels, which is actually quite positive, because that just showing that the ADR hasn't been impacted despite the situation and maybe the lack of demand, except for a market like Amsterdam, which is relying a lot more on international travelers, you know, and it has been much more complicated to get maybe local clientele for this kind of market, which can explain these lower numbers for Amsterdam. So now we're going to focus on the BeNeLux region only, with some data on Belgium, on Netherlands, and also some data on Luxembourg. So I've done the same exercise with the map of the BeNeLux with the 3 countries. So these are number occupancy index to 2019, but these are updated at the end of October 2021. So basically, these are the latest number we've got, which is really giving you, you know, the most recent pictures of what has been going on in the market. So here you can see that, of course, Brussels and Amsterdam, the 2 main cities, are still really behind, because they're relying, as I was saying, a lot more on international travelers, and it has been, you know, quite complicated to get people to come to these 2 countries, while the regional markets have been performing better and reaching, for some of them, like Rotterdam's 53% of the 2019 level, which is, I guess, the best performing market, regional market in the Netherlands, but in the Benelux in general. And some other market like Luxembourg, you know, like still stand at 41% of their 2019 levels. Then we've done the exercise, but only for the months of August, September, and October. So this is to show you the turnaround that we've been seeing for most of the European markets. We just done a webinar for France before, and it was the same picture that for August, September, and October, the numbers looks much more stronger than, of course, the numbers from January to end of July. So here again, you can see that this is the occupancy index to 2019 levels. Again, here we can see that Rotterdam is the best performing regional market with 65% of the 2019 levels, then followed by Antwerp, Ghent, and also like the Hague or Bruges, 63, like surpassing 60%, which is actually quite positive. And even for Amsterdam, I guess for the first time since the pandemic began, we can see a number surpassing 50% of 2019 level, and the same for Brussels. Because of course, until now, the numbers have been really, really low, especially for these 2 cities. So it's quite positive to see that they're reaching finally the 50% mark in terms of comparison with 2019. So then we've done a focus first on Belgium and Luxembourg, and then we have the same slide for the Netherlands. So here, this is the average occupancy from January to November 2021, so only for this year. This is not an index. So this is just to show you how the submarkets have been experiencing, you know, some spike in occupancy, for example, with Bruges that had a really strong summer, reaching 70% of occupancy, like 65 by the end of August. Also, like some other submarkets like Antwerp reaching more than 70% at the end of October. Of course, you can see here that Brussels is well behind, And I've just put the mark with the new restriction that have been put in place in Belgium around the 17th of November. So it's going to be interesting to see the impact on this new restriction for the upcoming months and especially for the rest of the year. Then we've got the same number, but for the Netherlands. So we've got the different submarkets: Amsterdam, Eindhoven, Maastricht, Rotterdam, The Hague, and Utrecht. So here we can see a similar pattern, with Amsterdam being the last market and the regional markets obviously performing well better, especially The Hague reaching 80% of occupancy this summer, followed by Maastricht that also had really, really good numbers and really positive numbers. And then, of course, I also put the mark with the new partial lockdown restriction that have been put in place on the 13th of November. So we can see at the end of the graph, of course, a decrease that might be the direct impact on the new restriction. But I mean, it's a little bit too soon to see the direct impact, but it's going to be interesting again to see that in the upcoming months. So now we've done the same exercise that we've done before with the European market, but just for the BeNeLux, with the weekday and then the weekend occupancy index to 2019 levels for the past 3 to 4 months. So we've got Amsterdam, Antwerp, Brussels, Luxembourg, and Rotterdam, which is basically the 5 main markets. Here you can see that the recovery for Amsterdam hasn't surpassed 60%, or by a short percentage, 60% of their occupancy of like the levels of 2019, while again, some other markets like Rotterdam and Antwerp have been performing quite well, reaching 80% of the 2019 levels for the weekday. This can be explained, of course, with the lack of the business clienteles, the MICE that, of course, is not here during the week, no special events that have been really able to take place in Amsterdam or in other cities. And then we got a better picture for the weekend that are not been suffering so much in terms of occupancy comparing to the week. For most of the markets, especially Rotterdam, Antwerp, again, even Amsterdam, because they reached 80% of their 2019 level since August, end of August. And Luxembourg is also doing well, with a really up and down trend depending on the week. But for example, the last week that we've got in the graph on the 14th of November, they reached more than 80% of their 2019 level, which is not bad. So then we've got the ADR for Belgium and Luxembourg. So for the different submarkets. So here, this is only for this year. This is just to highlight that, of course, there've been like a lot of up and downs depending on the submarket, but rates again have been maintained with, for example, if you can see of Brussels, that it's again like on the lower curve comparing to other submarkets. And then we've done the same exercise for the Netherlands. So here you can see that the trend is a little bit different, because we can see some spikes, for example, with Rotterdam area, might be because of some events that have been, taken place at this moment. And then what we can see, the positive side for Amsterdam is that since September, we can finally see an increase in the rates, in the average rates for Amsterdam, which also shows some signs of recovery for this market. Finally, after being quite flat for basically from January to September, but as of like mid-September, we can really see an increase in the rates in the Amsterdam submarkets. So then we've done the same exercise for the ADR, weekday and then weekend. So here we are at a recovery level between 65, 70 to more than 80%, depending on the market. Once again, Antwerp and Rotterdam area are, as the occupancy, same trend. They are the best performing markets in the BeNeLux, while of course Brussels is struggling a little bit more, especially during the weekday. And then we've got Amsterdam that actually has been performing better, but especially since the end of October until the 14th of the week of 14th of November, which then when the new restriction has been put in place. So it's gonna be quite, I mean, the trend can be, again, be different for the weeks after the 14th of November, depending, of course, on the impact of the new restriction on the country. And then we've got the same number, but for the weekend. So here, again, and this is a similar trend for all European markets, that of course the weekends have not been impacted so much comparing to the weekdays. So here we can see that the global recovery is between 90 and 100% of their 2019 levels in terms of ADR. So the impact has been quite small in terms of ADR during the weekend for the past 3 months. Now we're gonna look at some forward data, which are actually for the Netherlands, especially quite interesting comparing to other European markets, because basically, well, this is the occupancy on the books as of the November 15. So you can see some spike in basically all the submarkets, especially Antwerp with like big spikes, and Amsterdam when comes the Christmas break around the 20th of December until the beginning of January, that has a occupancy reaching almost 50%, but still the booking window, of course, remains short. And again, the regional markets are looking stronger than the city. But what's interesting is that we've done the exercise as of November 15, and then we've done the same graph as of November 22nd. So 1 week later, when basically the new restriction have been put in place in the Netherlands, which has a direct impact, and also in Belgium. So had a direct impact on the booking, because you might not be seeing it well here, but if you, when you receive the presentation, you can see that the booking levels for most of the markets, maybe not all of them, I've lowered down a little bit because this has, and we're going to see it even more in the pickup data from a week to another. So this is just to highlight basically the short term and the direct impact on new restrictions that have been put in place at a city level. So for example, this is the pickup. So again, for the same cities, Amsterdam, Brussels, Utrecht, Antwerp, Hague, and Rotterdam, for the next 83 days as of November 15. So as you can see, for some of the market like Rotterdam or Amsterdam and also Utrecht, we have some negative pickup, which is basically cancellations, and everything which is above 0% are actual new reservations. But then if now we're gonna pass to the other slide, which is as of November 22nd, which is 1 week later, you can see that the picture totally changed, and we have a lot of cancellation coming in just from a week to another. This is basically the direct impact of the new restriction that have been put in place, especially in the Netherlands and especially in the short term for Amsterdam, because you can see a lot of new cancellation. So the Amsterdam is the blue line. So you can see that it's even reaching minus 15%, same for Utrecht, and also some cancellation for Rotterdam. Here is interesting to see that for Belgium, of course, the restrictions have not been so deep, I guess, so difficult for now. So of course, the impact is not so strong as that we can experience in the Netherlands. And it's also interesting to note that the Christmas break, if you can see from the 20th of December until beginning of January, the curve is still flat. So there's no negative pickup, because basically the restriction have been put in place, I guess, for a month or so, or like a short-term period of time. So we can just assume that people are actually waiting for this restriction maybe to be lifted by Christmas and to be able, of course, to travel, and they're just maintaining their reservation. But of course, we'll be able to see that in the upcoming weeks, as Christmas is just around the corner. So that was for our forward data. Now we're gonna have just two slides on the profitability European data we've got. So these data are not, of course, on the same sample of hotels, because we've got a smaller numbers of hotels reporting the P&L data, but this is just to give you an idea of the global gross operating profit per available room at a European level. And then we've got the same slide, but for each key market in Europe. So this is just to show you that, for example, for Europe, if you focus on Europe until May, there was basically no profits. The financial health of European hotels were badly impacted. But since May, of course, we've been seeing that this is the index. And then we've been seeing basically positive percentage again, comparing to 2019 level. And at the end of August, Europe reached 78% of the 2019 levels in terms of RevPAR, which is actually not too bad comparing, with the situation. And then we've got the data. No, I've only got this. Okay, so this is just for, to give you a little bit of insight on what is going on basically in Europe in terms of profitability. And then we're going to pass on our last section, which is the forecast. As you might know, we just released the latest forecast at the end of November. And we're doing a quarterly forecast, and we are obviously doing forecasts per main cities, but these numbers that I'm going to show you are for the European market globally. So of course, we need to talk about a little bit of the Omicron variant, which is the main topic in the news lately. I guess everybody is aware of it, and we just put these slides to basically tell that we didn't really take into consideration the Omicron variant in our forecast of November, just because, of course, it all happened at the same time. So we didn't really have the time to really include the impact, what the impact could be of this new variant on our, basically on our assumption that we're going to make. But basically, we've done 5 assumptions, which is basically the first one. It's concerning the global public health condition that is going to be really destabilized in Q4 2019. But we really expect that this is just going to have a short-term impact, and then the improvement is going to be seen really quickly in 2022 once the restrictions are going to be lifted. Of course, we've got a little bit of risk in the less vaccinated region, in some Europe, especially in some Eastern European countries like as Poland and the Czech Republic. But in globally, we've got like more than 70% of the European Occidental European population that has been vaccinated. But we still got this outbreak risk in this less vaccinated region that we need to take into consideration in our assumptions. Then we've got the short-haul international travel segments that we only expect to be recovering at 2019 levels by 2023. And then, of course, we are seeing a really slow improvement in the long-haul travel segment, which is going to be, for us, you're going to see that later, the last travel segment to be fully recovered comparing to 2019 levels. And of course, this is also going to be directly impacted on new approval of other vaccine, for example, for the Russian vaccines or vaccine coming from other country that for now has not been approved by the WHO. So this is going to have, be really impacted by this, by basically this vaccine being approved not in the upcoming months. Then the third assumption is about the business travel and the MICE in general. So we are expecting that it is going to be normalized through 2022 because, of course, the different companies are going to revising the budgets and the travel policies. And the risk is, of course, the recovery is going to be a little bit slower in terms of international business spend. And we only expect these levels to be reaching 2019 levels by 2026. We saw, of course, also that some events have been held in 2021, which showed some kind of recovery in terms of MICE and business travels, but also that showed that the importance of meeting in person, doing in-person events, and of course in reinstalling this confidence about traveling for business purposes. On the group demand side, we expect to be recovering by 2022 at a slow pace, mostly because of this booking lag, and also of course the risk of organizing group travels or like big group event or group conference that can be canceled at any time, because of course the situation is still a little bit really up and down, and it's changing really quickly. And then the last section of our European forecast is about the leisure travel, so which is basically our booster travel segment since the beginning of the pandemic, because we expect, of course, this segment to be recovering the fastest. And also this is going to be really depending on several factors like the reduced public health concerns, the economic condition, the lifting of the restriction internationally in each country. And of course, then the risk here is that, as what is happening right now with the Omicron variant, is that we're going to just experience in each country different levels of restriction, but we just expect that this is going to have a short-term impact on recovery. And as soon as the restriction will be lifted, the people, and especially the leisure travelers, are going to just have the willing to be traveling again really quickly. And just a last note on the long haul travel, which is of course only expected, well, it's basically expected to be remain quite muted until 2024, because of course this is like quite difficult travel segment at the moment because of all the vaccines and all the travel restriction and difficulties for everybody to cope with. Here we've got the summary of our global latest forecast. So we're working in collaboration with Tourism Economics, just for the ones that might be new to STR. But these are numbers that have been put in place by our forecast team. So as we were saying on our assumption, we expect the domestic travel segment to be recovering by 2022. Then we expect the what we call intra-regional, which is basically pan-European travels, to be recovering by 2024, which gives us a total recovery of 2023. And then, of course, the latest travel segment will be the long haul to achieve their 2019 levels, because we can see here that even in 2024, for now, we expect that the long haul travel will still be 4% below their 2019 levels. So then we've got 3 more slides on the forecast side. So the first one is on occupancy, the second one will be on ADR, and the third on RevPAR. So here you can see in the first graph, the comparison, it's always a comparison between 2019 levels with the three different years. So the first one is comparison with 2020, the second is 2021, and the third is comparison with 2022. So basically, we've got from the end, well, by the end of 2020, we had 60% lower than 2019 levels occupancy. So this is the aggregated performance of all the cities that you can see at the bottom of the slide, just for you to understand what is this number for. And then for 2021, by the end of the year, we are expecting a recovery by, well, basically the occupancy to be 26% lower than 2019 levels. And then, well, we basically expect that by 2022, so at the end of the year, at the end of next year, we're only going to be 8% lower than 2019's levels in terms of occupancy at a European insights. Then on the ADR, it's a little bit different because, of course, the ADR has not been so much impacted as the occupancy. So, of course, we expect a recovery much stronger because at the end of 2021, so in the second graph in the middle, we expect that by the end of this year, we'll be only at 9% lower in terms of ADR comparing to 2019 levels. while we expect that by the end of 2022, we're going to be basically at the same, almost at the same level of 2019 levels in terms of ADR, with only 1% below 2019 levels. And then the last slide on the forecast is basically the RevPAR, which is going to take a little bit longer to recover because we expect almost a fully recovery by the beginning of 2023, with 91% of the 2019 levels by Q1 2023. So this is for the RevPAR. And then, so as a conclusion, we've got some key takeaways, and then of course we're gonna have a Q&A session. So of course the demand has and is continuing to recover, and as you can see, we can see in some data will grow past 2019 levels for some of the markets, of course at a different pace. Then we also wanted to highlight that there are many opportunities at this moment for regional markets to shine, and also of course focus on local travelers, because we've been seeing that in other European markets that have been able, to attract local clientele rather than focusing on international customers, because of course at the moment it's actually easier to get local travelers to come into your hotel rather than people coming from across the world. So there are real opportunities to focus on local travelers at the moment. And the third key takeaway is, despite every challenges that our industry is facing at the moment, the desire for people globally, I guess in Europe or in the Netherlands, in Belgium or Luxembourg, will continue to be really strong, with the willing to travel, and of course to meet again, this will always remain. So yeah, that's it for now. Thank you very much everybody for listening, and then I'm gonna stop sharing my screen, and we're gonna have the Q&A session.
Thank you, Rosanne, for that update, and thank you all for listening. If you have any questions, please do feel free to put it into the Q&A. I will pick it up from there. There was one question earlier about the difference in the cities in terms of your locations, whether it's coastal or rural or cities itself. So if you could share some insights on that.
Yeah, so for the Netherlands especially, well, over the summer, we had really, because we are also doing this European, this BeNeLux review each month. So it was really interesting to see that, especially for the summer, the numbers for like coastal cities have been really high, especially of course for the Netherlands, because we've got more data on the Netherlands and Belgium for the coast. But then of course the main cities, I guess, because I've been reviewing the numbers since the beginning of the year basically, and like Amsterdam and Brussels have been lagging a lot since the beginning, and I mean the data has been like pretty much flat, apart from these past 2 to 3 months, as we saw in the numbers, that it's picking up a little bit. And then other really strong market like Maastricht or Rotterdam that are really being also strong. So globally in the Netherlands, I was really surprised comparing to other markets, because of course, for example, in France, the numbers were really strong in like basically all the regional markets, whether it's on the coast or in the country. And it was the same for Bruges. Bruges had really high occupancy level this summer. So yeah, on the regional side of the BeNeLux, it was quite a good picture, I guess, for the past, I guess, 6 months.
And I think this is consistent with what we've seen in markets pretty much all around the world. Any leisure focused destination has performed better, both in occupancy and ADR terms, than any sort of city destination. But we're starting to see that, as you saw, Rosianne presented, your weekend business definitely doing better than some of your weekday businesses as well. Another question that just came through is, are we seeing differences in recovery in different hotel classes?
It's a little bit hard to say. I mean, I wouldn't have I would need to pull the data, especially, but I mean, I wouldn't do any assumption right now because I mean, I don't even, and again, the different kind of hotel classes we've got depending on the market is so different. Like for example, in the regional markets, either in the Netherlands or in Belgium, we don't have a lot of luxury properties or high-end properties, while in Amsterdam, we've got quite a lot of more like luxury properties. So yeah, I would say that it's a little bit complicated to say, but I mean, we just would need to pull this data.
Yeah. So I've just put your email in the chat. So
Yeah.
for anyone wanting to look for more specific data, please feel free to reach out to Rosianne and she'll be able to provide you with some more detailed information depending on what setup you have at the moment or if you're interested in more data. But yeah, I mean, I think that's it for today in that case. Thank you so much, Rosianne, for that update. And thank you all for joining. Wishing you all a good weekend. And yes, hopefully you're at least in the Netherlands. The restrictions only last for another 2 weeks.
Yeah.
And yeah, wishing everyone a happy holidays and a happy Christmas.
Thank you, everybody, and have a good day. Bye.